Welcome back to the channel. Jack Ram here with Simply Vegas. Today I am talking to you about the U.S. economy, what's happening with the real estate market with these rising interest rates, and where we're going next. I'm going to give you my opinion on that, and pretty much just my prediction, what I think is going to happen with real estate prices over time. With that said, let's get right into it. The Wall Street Journal already published this one a few days ago. U.S. GDP falls by 1.4% as the economy shrinks for the first time since the early in the pandemic. So we haven't seen the economy shrink ever since COVID happened, and that was over 2 years ago. And now for the first time we have the first signs of a recession. We don't know usually when we're in a recession until it actually happens. And in this case, a recession, for those of you who don't know, is pretty much 2 quarters of falling GDP. We already had the first one right now. It looks like it's going to keep falling, and at least the stock market is falling, and we might get the second quarter of GDP falling, which means we will be officially in a recession by the next quarter. So in about 2 to 3 months. With that said, what does that mean for real estate prices? I'm going to give you a little bit of my opinion. Let's give you first a little bit of a housing market update and show you what's happening in the market right now. So one of the big factors on what's weighing on the real estate market right now is the interest rates. As you can see, 2.979 is the current interest rate yield on the 10-year Treasury, which pretty much, again, if you guys don't know what it means, the 10-year Treasury yield, what it is it's pretty much a correlation to, it's very correlated with what is happening with today's interest rates, with the real estate market interest rates. So what it means is that if here we have a 3% interest rate on on the 10-year yield, it means with mortgage rates usually we have about 5% or so, and that's what the case is right now. In fact, we have I think probably we're about 5.5% with the current rates. As you can see, the rates have been going up, exponentially right now. But this is only if you look at the last year. However, if we go back in time and we look a little bit what's happened throughout history with interest rates, we'll see that we're actually pretty record low interest rates. As you can see, this is from the 1980s, back when we had the inflation from the Vietnam War, where we printed a bunch of money to get out of trouble because, we had the war, so we had to, spend a lot of money to make up for all the damage that the war created, and all the debt that the government got into. And here we go, interest rates went up to, at some point, 15%, which meant for mortgage interest rates, we were about 18% or so. And as you can see, ever since, we've had a decline in interest rates. And now we're seeing these huge increases with interest rate. But if you look at it, the last year that we saw was pretty much from here to here, right? So if you look at the big picture, we see that we actually have pretty low interest rates at the moment. So it might not be a bad time to lock in a good, interest rates for, your new home. And, but a lot of people say, well, back in 1980, we used to have home prices that were way lower than what they are right now. In fact, we look at what the home prices were back in 1980, average cost of a new home, it was $68,000. Compared to today, we are at probably like $450, because this is from 2018 was $385. Right now, average price of a home is about $450, at least to build it, right? So 68,000 back then, that's quite an increase, right? But at the end of the day, we had 18% interest rates as well. Now, what happened before that, though? It's important, because right now I can't go any farther back because this graph doesn't go any farther back. But we used to have lower interest rates. We had this spike in order to fight inflation back then. And it's a very comparable time in history that we had back then, when they had to print money for whatever reason, right? Which is what they did here during COVID, where they printed money, to pretty much get ourselves out of trouble, since we stopped completely the economy. So comparison-wise, we're looking at big difference, and we might see some higher interest rates. In fact, right now we are with the mortgage, we're probably at 5.5. I wouldn't be surprised if we get a little bit higher in with the interest rates going probably 6, 7, even up to 8%. But I think that's only in the short term. I don't think this is going to last. I think we're going to eventually have to, slow down a little bit on the interest rate hikes, because as you can see already, we have already the first signs of trouble. You look at these people at Walmart's here, they have empty carts. And, that's probably the case right now for a lot of people, because you don't get much, um, food and groceries with the money that you're spending due to the inflation. Inflation, in the meantime, as the economy is shrinking, inflation is at 8.5%, which is pretty much, that's what they're saying that it is, but I'm pretty sure it's way more than that. So how does this affect the real estate market? That's a big question that we're trying to answer right now, right? I just want to give you a little bit of an oversee of what's happening with the interest rates, GDP, and everything. The economy looks like it's in a little bit of trouble. We see the stock market correcting, we see the GDP correcting, but is that going to happen with the real estate market? Well, let's see. We look at the housing market right here. So far, a typical buyer's monthly payment is up 39%, the biggest annual gain on record ever, which means not only we have inflation happening, which is bringing asset prices up, because, as you might know, real estate is a great hedge against inflation. But at the same time, we also have mortgage interest rates going up. All of this is putting a big weight on the buyer, which has to pay 39% more to afford a home. But what does that mean? Can you just go and rent in this case? Good one. I mean, rents are up 20-25% year over year, I believe. So, it's difficult out there for a lot of people, either if you're renting or buying, because what's happening is your money is worth less, and prices keep going up. And to live and afford a house and a decent lifestyle, it gets more and more expensive over time. And what I mean by this is, look at what happened here. I mean, wages. If you look at the wages since, let's say, 1930s up to today, right? We have, this is the price of a new home, right? We have $3,845 it used to cost to buy a home in 1930, right? And now we have $385,000. So that's 100 times more expensive compared to 1930. And that's just the way it is when you print a lot of money, when the government prints money. It's just the way it is. That's what causes inflation. It's nothing else but the government printing money. They call it quantitative easing and all this stuff, but at the end of the day, they increase the money supply. And what about the wages? Have those gone up 100 times since 1930s? And you look at this, the average wage, yearly wages were in 1930, 1970. Okay, not $1,970 per year. What is it now? $52,000 per year. Now, you do 52 divided by 2,000, probably around 26 times. So the wages, people's wages have multiplied 26 times. But then the cost of a home has multiplied 100 times. So if you could afford a house back here with only one, you were wealthy probably with this, this amount of money, you could definitely afford to buy a home, because the wages were, in 1930, where 2,000 cost of a house 4,000. With 2 years of wages, you could buy a home out cash. Right now, it's way worse. So that's the big issue that I have with the government printing money, because then eventually they skew the the inflation rates, changing the algorithms on how they calculate real inflation. And then the people that get hurt are the middle class, the renters, the lower class people, because they don't own any assets and they don't, hedge themselves against inflation. So anyway, how is this going to affect our market? And this is all going to play into what I'm trying to cover right now, because that's why I'm extending a little bit more and being a little bit more detailed with the history of what happened. And how is this going to affect us in the real estate market, at least in the short term, and in the long term, what my view is. And you look at here, home sellers and buyers are retreating at similar rates. Very important to understand, resulting in a housing market that remains very competitive, even as it slows. So, just because the housing market is slowing, which means there's less houses being sold, it doesn't mean that home prices are going down. Really, really important to understand, because now, if if we have less homes, less homes purchased because there's less demand due to interest rates rising, and the cost of living here rising because it costs 39% more on the monthly payment. It's higher for people to purchase a home. Then in that case, people slow down. They just stop buying, or at least the people that cannot afford it stop buying, and they rent. Rents keep going up. But then we have, at the same time, all those buyers are also sellers at some point. Unless you're a renter, you're trying to get into a home, great. But if you're not, if you have to sell a house to get into another house, so you can use your equity to get into another house, people are probably going to stay put. They're not going to move. They're not going to sell their house, which is going to create more inventory as well. So yes, what they're saying here on Redfin is, hey, we have seen a slowdown, but we've seen a slowdown with buyers as well as sellers. And I'm going to tell you what I see in the market personally, because I'm always out there, especially with new construction. I know every new builder out there, and I know all the available homes on the market. And I can tell you, at least here in Las Vegas, what's happening. And what I see personally is prices keep going up, no matter what. And interest rates keep going up, no matter what. And then we have a little bit more inventory on the market. In fact, you go and you let's look at a little bit of the inventory here in Las Vegas and what we have. So I'm trying to open my new home site. Let's go to Las Vegas. And that area. And we try to zoom in onto some communities. I'm just going to start here. Let's say in the Northwest, we'll see some inventory. So we're looking in January, like right at the end of January or February, we had no inventory available. Like you would go into any new construction builder and there is nothing available. Literally, like probably one house, two houses that comes back on the market or something like that. It would be sold in minutes, like in one day at least. Now, I'm going to new construction homes. I was just here in Sky Canyon yesterday. We have inventory. Well, Ridgeview is built out. We have inventory at Aviano by Toll Brothers. They have 6 or 7 spec homes to sell. We have Montrose, which is also Toll Brothers. They have a few homes here, like 2 or 3. We go to Vista Rosa. We have 6 homes as well, spec homes ready to sell. Either they came back on the market because someone didn't qualify. There's a little bit of inventory. You go here, Valera and the Paloma collection. Also, they do have some inventory. Valera a little bit less because it's such a unique product up there. It's being bought a little bit faster. I think they have 1 home available versus the Paloma collection. They have 3 or 4 homes, and they took a few off the market that they're going to do they're going to make into spec homes. Eagle Point right here, they do have a few homes available, even though it's a lower price range. But this, I think, it's more because they don't have model homes yet, and people don't know about this community yet. Which if you have a good realtor, by the way, that will help you get the right house. And look at the opportunity. Small, a little pitch for you guys down in the description. If you're looking to buy a home out here in Las Vegas, I would love to assist you. Over here, Richmond, you can walk in, get a lot now today. You go to Sky Hills. This one, they don't have any inventory. You go to Talbona and Ball Ridge collection. You can go in. You can choose a spec home. Possibly you can wait for a lot to be released and do a bidding war on it. But there's a little bit of inventory, These not really. KB is it's always booked out. They're very difficult to get a home in there. You got to do the whole drawing list situation. Same thing in Summerlin, Castellana. We have inventory right here. Carmel Hills, Carmel Cliff. We have inventory as well with Pulte. Arroyo's Edge. This one is coming up soon. That's an awesome community. You go shoot some videos. So just to show you here, there's a lot of inventory available depending on the builder, the location, and all of that. You go to the Southwest, you have a little bit less inventory. Over here we have KB, American West are the main builders. They don't have much available. There's just such a big demand because of the location being a little bit closer to the strip. It's difficult to get a home out here. Over here in Inspirada, also very low inventory. There's just a few builders. Those great schools that they have is really difficult to buy out there. And then you look at over here, Lake Las Vegas, they do have inventory, but that's a different crowd that buys over there. And Henderson and Cadence, they do have inventory as well. So what I mean is, what I'm seeing in the market is there is a little bit of a slowdown. I see, you know, not necessarily prices going down. I see prices keep going up. I just had Pulte had price increases, 12,000 up in Sky Canyon. We had KB throughout the whole valley in the Southwest, especially. That's where they built $5,000 throughout the valley. Now this was just literally within the last 2 weeks. We had Richmond brings up prices pretty much every two homes that they sell. Um, what's it called? Signature Homes just brought up prices. Now, off the top of my head, the American West, they're bringing up prices like crazy, and people keep buying. You look at American West and Pulte, they do bidding wars on lots, and people keep buying even though interest rates are going up like this. And the reason why is because it's either this or you're going to have to buy next year at who knows what interest rate and who knows what the price is going to be of the house. And you might be saying, well, Jack, when is the market actually going to correct? Is this actually going to cause a slowdown, somewhat of a slowdown? With home prices, with interest rates keep rising at some point, the buyers are just going to tap out. I'm out. I can't buy anymore. Well, in that case, what's your other option? If everybody taps out, they go and rent a house. Rent prices keep going up because there's more demand for rent because there's no supply available, and that's what it comes down to at the end of the day. So let me go over that supply and demand chart that I wanted to cover with you guys, right? So what actually affects real estate market prices is supply and demand, right? The basic economics. But what is it that affects supply? And that would be the builders. How many people are building? How many builders are actually creating new homes? And how many people are moving here? That is obviously a local thing. You have more cities that people are traveling away from, and then you have more cities that people are going to, like Las Vegas. And then you have also investors and investor sentiment. How they feel about it. We have these big funds that are coming in and purchasing up all the inventory available. There are some communities that some builders are building. Like I know Century is building a brand new townhome community in the Northwest, and they are just going to rent it out. I was hoping for them to sell it so I could sell those homes, but they're going to rent it out because they see a lot more money to be made in the rental market. And that's another way that they can make money. All these big funds like BlackRock coming in, purchasing a lot of homes, cash, and those are the ones that are not slowing down. All the listings that get put on the market, within a day, 2 days, we get offers, cash offers from these big funds that are willing to pay way above, like 5-10% above what the house is actually worth. And it surprises me because I see this in the market every day now. I don't like to overpay for real estate prices, but it's happening. So those people are taking away supply from the market, which means there are less homes available for the regular person that is trying to buy a home, right? Because that's the smart money. They're coming in and purchasing all the homes. The builders, they can't build fast enough. There's supply shortages everywhere. You look anywhere you go, to build a house, it takes twice as long as a regular market would take. That's because, there's this big shipment, like, for example, Century has right now, this big shipment of, let's say, HVAC ducts and, what's it called, sprinkler systems ducts that they need, right? And these are all stuck in the middle of the ocean that can't come back, can't come to, on land to try to deliver them out, or there's just supply issues everywhere. And this is with all the builders out there, which means if they can't get the supplies, they can't build fast enough for the demand, which means prices are going to keep going up due to lower supply because builders can't build fast enough to satisfy the demand. And then, obviously the people moving here, I'm just talking about right here to Las Vegas, we have a huge increase in the amount of people that are moving, especially from California, but also other big cities like Seattle, New York, New Jersey, pretty much from anywhere, Colorado. They're all coming out here to Las Vegas to take advantage of the lower cost of living and also your, what's it called? Zero state income taxes. It's just no brainer for a lot of people, especially if you're working from home. So we have this huge demand, and prices keep going up in Las Vegas. But what about the demand, right? And how is that going to slow down depending on the interest rates? Well, the demand is pretty much shaped by two main things, right? In the market, there's always going to be a need for people to buy a home because it doesn't matter uh, if it's like with crypto, you don't need to buy crypto, right? Or with I don't know, a vacation spot, you don't have to buy a vacation to survive, but everybody needs to buy a home. Okay, so you can see, I think all the money right now is shifting over into real estate because that's the real hedge against inflation. When things get rough out there, and it's tough for people to survive, they're going to stop buying those things like investing in crypto, and speculating in the stock market, and gambling and going out to have fun and all that stuff. That's going to slow down. But what's not going to slow down is the fact that people need a place to live. And as long as the supply is down and the demand, there's always going to be demand for real estate. Um, it's going to stay there. But interest rates could slow down, which it has already. But what's the alternative at this point with such crazy inflation? You go rent. Right now, you have, let's say, a $1,600 a month rent for a two-bedroom condo. Next year is going to be $2,000, $2,500. Who knows if they keep going at this rate? So you're not securing anything for 30 years. That's why a lot of people are saying no. You know what? I'd rather just go ahead and lock in something right now, and then that way I have control of my finances, right? So yes, interest rates are shaping a little bit, but not enough in my opinion. But the main thing that is causing this demand is the money printing. So how the government prints money into circulation or just creates it with a digit, whatever they do. It creates a lot of savings for people. At least that's what happened. With COVID, nobody went out, nobody traveled. They saved up all their money and they bought a lot of real estate, right? So more money in circulation creates inflation, which creates more money to purchase the same assets, which is real estate, and that increases the demand because now what happens is if people have more money, the prices of homes go up. People refinance, they take out more cash from their houses and they put it back into the economy. That's huge. That creates a lot of demand. So that's what's been happening, the two forces that are going together. What is my prediction overall? Well, you look back at, this is a 3-year chart of what happened with prices, mean the sales price. You go to the max. You see back in 2006, we had this huge, we had about 290,000 average sales price. Went down because of the Great Recession, because of, obviously, the market back in 2008 with mortgages and all that stuff. What happened with it? And then we have this big increase ever since, and now we are up at $388,000. This is pretty much in Las Vegas average sales price, and that's for any kind of property, not for single family homes. So just keep that in consideration. For single family homes, we're way higher. We're looking at 423 average sales price, which is 22% up 22% year over year. Okay, so huge increases. But now what's happening at with the supply? And you can see the sales were down. We're down with the sales from 4,500 in March. Now in April we're down to 4,000. So we're starting to see a little bit of a hit with the amount of homes being sold due to the higher interest rates. And we see also, where is it? The supply still going down. There's still very low supply. We're at 1 month and it stayed at 1 month. I just think this graph, it's not used to going below 1 month, but it's probably like at 0.9 right now, months of inventory. Which means if we were to stop building all the houses, not selling any more houses, with the amount of buyers that we have in the market, within 1 month, we would have no homes available, which is very low. That's why we have this huge seller's market. But we've seen a little bit of a correction, in the market. We've seen, just like this market says, and I really see it myself as well, it's slowing down as far as the amount of homes sold. But we're seeing still price increases. And that's what I think is going to keep happening. And here's the reason why. Let's compare that 1970s scenario, 1960s, 1970s scenario, where the average cost of a home, right? That's when we had that war, we printed a bunch of money, we had the huge inflation, and then they had to stop inflation by rising interest rates by up to 18%. But what happened to home prices back then? Well, 1960 we were at 12,000. to build a house. 1970, we were at 23,000. That's a 2x in 10 years. From 1970 to 1980, which was a big year, we're at 68,000. That's another 3x in 10 years. Like the increase in money and how much home prices can go up. And you look from 1980 to 1990, it slowed down again, went to 2x, which is still really high. My point is, even though interest rates rise, it doesn't mean that prices are going to go down, which is a fallacy that people think because there are so many things involved into it. So that's my take on this. I think we're going to see a scenario like this one where prices are going to keep rising. And it's not going to make sense for a lot of people until they actually get used to it. It might be too late for them to get in. It might be, they might not be able to purchase a home. But we're going towards the direction, in my opinion, where only the rich people will be able to buy a regular home. And, we'll have very few rich people, and everybody else is going to be lower class, not being able to afford a home. They need to rent, most likely a condo. The lifestyle of people is going to go down, where people cannot afford a home anymore. And that's just the reality of the situation, in my opinion. This is just my opinion. I'm just speculating. Again, I'm not your advisor. If you're a client of mine, I'm not telling you, hey, go buy homes because prices are going to go up for sure. This is just my opinion based on what I see, the data that I see out there, and what's happening. Obviously, you have to make your own decision. This is not personal advice, financial advice. It's just my opinion. With that said, guys, that's it. Let me know what you guys think about these videos. Leave me your comment down there. Let me know what you think is going to happen in the market. I would love to hear your opinion. I'm going to read it. I'm going to react to it. If you're watching this on the main channel, great. That's awesome. If you are not, check out my second channel because I'm going to be posting videos like these only on the second channel in the future. I'm just posting this one just to give an update to all my clients and all. But with that said, see you in the next video. Thank you so much for watching.